Well, the race against the clock kicked into high gear at the 11th hour here in Washington. Earlier this evening, House Republicans finally passed a bill to raise the debt ceiling and, of course, to cut $22 billion from next year's spending. But it was largely a symbolic gesture. In fact, Boehner might as well have added a pony to his bill. He's not getting that either. That's because the legislation now heads to the Senate where it is pretty much guaranteed to be voted down, possibly as early as this evening. And then, of course, it is back to square one. Now, the Senate Majority Leader will try to kickstart the process of moving to a final vote on a new plan. And while negotiations will continue behind closed doors, for now, the partisan debate rages on. As, of course, does the clock right there behind me. Now, when it comes to America's prized A rating, it may already actually be too late. Now, that's not according to me. That's according to Max Keiser. He's the host of the Keiser Report, and he joined us here on RT earlier today. Here's more from that interview.
Well, the rating on U.S. debt is definitely going to be downgraded, and this is already happening on the periphery. Rating agencies in other places around the world are flashing that they're going to be downgrading American debt. So that is baked into the cake. But what's interesting here is that for 10 years, really since post 9/11, we've had a war of savers versus speculators. The speculators have been winning. The speculators have been able to borrow money at near 0%. The savers have been the big losers. There are a lot of people who are in the savers camp who want to see the U.S. default because this would mean that the bond market would crash, but the yield on their savings would go up. Same thing for gold, which is where a lot of people have run now in this war. And gold prices have been telegraphing this catastrophe for 10 years. Gold prices continue to hit new all-time highs, and the people who own gold are really loving this because they're going to see price of gold continue to skyrocket.
So, Max, are you saying that Washington is not involved in this whole thing? I mean, you seem to be saying that really this is a mess made by Wall Street here.
Well, Washington is a peripheral player now. We see this all over the world, whether it's IMF is now pulling the strings in Europe. They're also pulling the strings in Washington. Christine Lagarde, as a matter of fact, said, who's the new chief of the IMF, that the extraordinary privilege the extravagant privilege of the U.S. dollar that's been enjoyed since World War II is now at risk as the U.S. dollar loses its world reserve currency. So the world is adjusting. The dollar will lose its status as world reserve currency. The U.S. debt will lose the AAA rating, and it's a complete different configuration. And Washington is not the biggest player in this. The global bankers are the biggest players, the global hedge fund managers, and that's where the action, that's who's determining the outcome of this, not the players in Washington. They have already ceded control to the global banking industry.
Well, then let me get you to react to this. We saw just today there was a report that the CEOs of the nation's leading banks, including, surprise, surprise, Goldman Sachs and JP Morgan, all ended up sending a letter to the White House and Congress urging them, pleading with them to please hurry up and reach that debt ceiling agreement. Why do that if you're saying here that they stand to profit from this whole mess?
Well, Lloyd Blankfein at Goldman Sachs, Jamie Dimon at JP Morgan, these are what I call 9/11 crybabies. They refuse to compete in this world. They want interest rates to be near zero. With a functioning U.S. economy, would mean interest rates are higher, which would destroy the speculators, but put money into the pockets of working class people. But the Jamie Dimons and the Lloyd Blankfeins and Wall Street in total, they're, as I call, they're 9/11 crybabies. They live on the teat of the subsidy that's given to them from the Federal Reserve and the Treasury. It's all about ensuring their bonuses and ensuring their salaries. They need to grow up. It's no longer, you can't go to Washington anymore with a cup in hand and cry that, oh, I got hurt on 9/11, I need more free money. You can't do that anymore. You're going to have to compete in the globe now. Put your big boy pants on and compete in the globe. Stop crying, victimhood. Be an adult in all this. Blankfein and Dimon, they're the most overrated bankers in the history of the world. They do nothing but suck corporate welfare and banking welfare from Washington, and they're adding nothing to the productivity of the U.S. economy, and they're a disgrace, and it's really humiliating to have to witness this. But this is part of the process, I suppose, that America has to go through to get to the next level of global competitiveness. Because right now, America's lost its competitiveness because of these bankers who have destroyed the economy for a few extra bucks.
Well, what is the next level? I mean, if you're saying that we're going to get down rate, if the dollar is going to turn into trash, if it's not well on its way there already, what is the next level? How do you get out of this mess?
Well, the way you get out of this mess is you need to accept the fact that the dollar is in a bubble and needs to be marked down by 50 or 60%. You need to take the hit, similar to what Iceland did. They said, look, we can't, we're not going to spend the rest of our time in the indentured servitude position from these bankers. We need to take the hit and let the krona collapse. The U.S., if they were being managed by somebody who knew something about economics and not Barack Obama, who's financially illiterate, they would allow the dollar to collapse against other currencies, let the economy go through 2 or 3 years of a gut-wrenching depression, and then come out of it and rebuild, and keep their sovereignty intact.
So you're saying shock therapy is the way to go?
To keep your sovereignty. Otherwise, America will end up like Greece, losing their sovereignty. America will end up like other countries in the Eurozone, like Ireland, that's lost its sovereignty to the IMF and these other banking institutions. I think most Americans would prefer to be sovereign and free than to be a vassal state of international bankers.
But
Barack Obama, by not explaining this to him.
I'm sorry to interrupt there, but if, you know, yes, I'm sure Americans do not want to see the loss of their sovereignty, but at the same time, most average folks out there, I mean, I don't know if they could see this going any worse. We have 14.1 million unemployed. We have 44 million on food stamps. I mean, how much worse is it going to get if we do this shock therapy approach?
It's not. They have this hasn't even begun to unfold in terms of the tragedy of the economy here in the U.S. because it's all about prices. The price of gas and food in America, and particularly the price of gas, will triple from its current level. And this is what people have to understand. This is going to happen regardless of what Obama does or John Boehner does. The global currency grid, the fiat money system is collapsing. This is what gold and silver are telling us. And gas has been artificially cheap for decades through subsidies coming out of government through the banking system, as well as all these wars of convenience that the U.S. wages in Iraq and Afghanistan. This is all just murder for hire by the oil industry to keep the price of gas down, to keep the man on the street calm and subdued. But the lid's coming off the kettle, and now the gas prices are going to be $6, $7, $8, $9, $10 a gallon, like it is in Europe. And then we'll start to see some real action. But that's baked into the cake, as I said before. That's nothing that anyone can do is going to stop this, because the post-World War II era of adding debt to finance growth climaxed in 2007. No amount of debt can stimulate any growth to pay this debt, because the economy has reached debt saturation. No amount of additional debt. And this is all the plan that Obama and Boehner are putting forward, is to restructure the debt or add to the debt. That's not going to create enough growth to pay down the debt. Therefore, ipso facto, as night follows day, this downward spiral of U.S. bonds, U.S. credit rating, and the U.S. economy is not going to be interrupted by anyone or any policy.
And Max, I know you're saying that Washington is sort of a peripheral player here in this whole mess, but these Tea Party folks, I mean, do you think that they really understand the consequence of what they're pushing for? Do you think they understand and are in fact calling for this shock therapy collapse, you know, cut off the finger to I guess, remove the virus? Or do you think that it's just, I don't know, ignorance? I'm going to oppose every single piece of legislation that comes before me because I got elected to do just that.
Well, the Tea Party is financed through the Koch brothers, and their allegiance is to the oil industry. And as prices of oil goes up, the Koch brothers make money, and the Tea Party are out on the street unemployed. Only in America do you find a population who's willing to go out to the street and fight for oligarchs and to fight for monopolists. This is unique to America, because everyone in America thinks they're only one lottery ticket away from being a billionaire. They don't seem to comprehend the fact that maybe as a joint effort, in a civil society, they have rights that they can lobby for and push back against these speculators and these borrowers. And this is what is, in my opinion, as I've said at the top of this of the segment, is that the savers are going to win this battle as the bond market crashes. So all the 9/11 crybabies on Wall Street are going to get punched in the face like they should have gotten 5 years ago, like Obama should have done when he took office in 2008. Kick out Geithner, kick out Larry Summers, kick out Ben Bernanke. Should have punched all those guys in the face, thrown them to the curb, bring in real responsible people like a Paul Volcker, for example. But instead, he decided to just keep the status quo going and to line the pockets of these bankers who now put a gun to his head, and they've basically embarrassed him. They want the election. They want to recall the election. It's like they're recalling the presidential election by making Barack Obama Obama appear as weak and ineffectual and financially illiterate as he now does, it's totally destroyed his career. But it's good for these bankers.
But do you really think that Obama could have done something? I mean, kicking those guys out of office, that's just a handful of a significant of a much larger entrenched interest there. Could he really have done more than he had to change the status quo here?
Absolutely. You've got guys, well, you have the example in the U.S., for example, in the savings and loan industry, where you had a somewhat similar situation where a handful of corrupt bankers dominated the industry, and they went to the government to get $600 billion worth of damage, essentially. And those folks were ring-fenced, and 1,500 bankers went to jail. And over a 20-year period of time, they worked out the problem. Had Obama done something similar, created a resolution trust corps type situation for all the bad debts, nationalized the banks for a year or two, kicked out the financial terrorists like Blank Fine, like Jamie Dimon, like the folks at Citigroup and Wells Fargo and Wachovia, who was caught laundering $230 billion worth of Mexican drug money, put those guys in jail, bring in responsible bankers, and restart the system. But this is where his financial illiteracy is important, because he does not really understand the dimensions of this problem at the time well enough to do the right thing. And now, 2 years later, it's kicking him in the pants, and he looks horrible, which is great, again, for the bankers. But ultimately, the global dynamic here, savers versus speculators. The savers are winning this battle. Gold and silver, as I've said on my show, Keiser report for the entire show that's been on the air, gold and silver, they are continuing to hit brand new highs. It's the only currency in the world that is safe, that is not encumbered by counterparty risk. And this is just going to continue. So this is really just, we're not even at the, we're at the beginning of the middle of the crisis that started in 2007, and the Lehman Brothers was the end of the beginning. Now we're in the beginning, in the middle of the middle. And we have not seen yet the biggest fireworks of this global banking catastrophe is yet to come.
Well, scary predictions there, Max. And very, very briefly, do these savers that are winning, as you say, do they have a name and a face? Who are these guys?
Well, I am, you know, the Silver Liberation Army that I started on my Keiser Report show on RT is part of the savers around the world that are licking our chops at the collapse of the U.S. dollar and the U.S. bond market, because you know, we're all for free markets. That's why
you're to blame for all this. Oh my! All right, Max. Well, we're out of time, but thank you so much. I really do appreciate you spending some time with us there in New York.